Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. We all want more time to spend with family and friends. We want time to engage in a purpose greater than ourselves, to have some sort of meaning in life. The challenge is we spend most of our time working to make money in order to live. Let me say that again. We spend our precious time working to make money in order to live. Imagine a life where money could make you money to live in order that we could work less and have more time for the things that matter most. Well, you can. Learn how from everyday people who are making this a reality. Don't go anywhere. We'll be right back. Coming up, Matt Piche teaches us how our money can make us money investing in single-family rentals.
Single-family rentals are the bread and butter of my portfolio. It makes up the majority of my properties. And like I said, it's because it's so high quality. In my opinion, it's the highest quality renter you can get in long-term buy and hold real estate.
Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Clover Properties Rent to Own, invest with a purpose. Sam McDaddy Real Estate, full service brokerage for all your buying, selling, and investing needs.
Hey, it's Rob. Welcome back to Everyday Investor. Remember, whenever you're offered any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on investment? Number 2, when do I get that return? 3, what is the cash amount needed? And number 4, what is the risk, the worst case scenario? On today's episode, we're going to learn how to make money investing in single family rentals. My good friend Matt Piche is here. Matt, thanks so much for being on the show.
Thanks for having me.
You know, what's really interesting is I saw an interview with you online, and you were talking about how real estate investing is not your passion.
Yeah.
And so I'm looking at this guy. I know that he's a savvy investor. You're traveling, you're teaching people, and yet you are very strong in the opinion, real estate investing is not my passion. Why don't you explain that a little bit?
Yeah, so the whole point of real estate for me is to fund my life so I can have fun in my life. So real estate for me is very boring, it's very passive. I want it to be easy, high quality, so that I'm not getting phone calls at midnight for tenants not paying rent or breaking the house, etc. So I use it to have fun in my life.
I love that. It's to fund your life so you can have fun in your life. And you know, I wish more people would talk like that. I know they all want that, even investors, right? But we can make a big mistake in this game and get addicted to just the investing, making money for the sake of making money, as opposed to making money so that we can have what's the greatest currency we have. We know how to spend it. God's not giving us any more of it. And that's the 168 hours that we have in a week.
Exactly.
And so, you know, when I saw you, you know, speak on that, I was inspired. And I appreciate that, you know, that you're so bold to be able to say, real estate is not my passion. Spending time with loved ones is my passion. Real estate investing is a tool.
Exactly.
So how did you get involved in this game? Before you even get into that, what's been going on in life? What are you doing? What are you excited about?
So we travel a lot. That's what I like to do with the real estate money that we're making.
And you say we're
my partner and I, Rachel. So we just like to have fun and live life, not be so caught up in the business. And as you said, investors get caught up too much in the business, trying to build this business, this big empire, when there's no need. Just keep it simple, keep it high quality so that you can live your life. Because
when you're doing anything, whether it's a business, whether it's building a real estate investment portfolio, which is a business, you can always work on it, right? It never stops.
Exactly.
And so we have to be very careful. I have to be very careful. You know, I'm addicted to making money. And it's not a good thing. It's great to be able to make money. It serves as a tool. But to be self-aware and say, hey, this is my addiction. So you have to know who you are. No, that's great. I think that's great. So you've been traveling, you've been doing that kind of stuff. You do all sorts of different investment vehicles. You wanted to speak on single-family rentals. Kind of how does it work and why do you like it?
So single-family rentals are the bread and butter of my portfolio. It makes up the majority of my properties. And like I said, it's because it's so high quality. In my opinion, it's the highest quality renter you can get in long-term buy and hold real estate. So I really want that ease, that predictable, reliable family living in my property. They're going to raise their kids, have the dog and the cat, live in the home for years, which is the case that we're seeing with my properties. Like some of my tenants have been there for 5, 6, almost 7 years. Great paying tenants, and that's what I want. Just boring, simple. I can't say that enough.
That's fantastic. You know, it's what I love about this show is everyone's different. You know, there'll be other people that would say to you, Matt, what are you thinking? Why not get 3-4 rents for one furnace? And they're right. for them.
Exactly.
You know, and Matt is right for him. And
Yeah.
you know, I love hearing you say that. And the reason why is because you're saying it brings you value to be able to have it brings you peace of mind, it brings you a great sleep at night to know that there's a great family tenant renting out your property. And you're saying the majority of your holds are single dwellings.
Yeah, the majority of them. And like you said, it's important to align your ideal lifestyle with the real estate investing strategy you're using. So for me, like I said, I wanted passive. So it makes sense for me to do that. Somebody else who wants to make more money or grow this business bigger, maybe faster, maybe multifamily is right for them, maybe student properties is right for them and their goals. So it's really important to figure that out right away before you start buying all these properties. And then you figure out, student properties isn't for me, and you own 4 or 5 of them.
And is this what, Matt Piche education, is this kind of what you teach people that hey, you can't just ask me what should I invest in? It depends on your profile. It depends on what you want. Do you want to grow capital? If you want to grow capital, do you want to work for it or do you want it passive? Do you want cash flow? Do you want to work for it? Okay, so this is the kind of stuff that you've been teaching and building your business with. So help me do this. So how do I find this valuable, client? I'm sure, you look at them as precious clients and not just, a tenant that you don't care about.
Exactly.
Talk about how Matt does that. What's the process?
It's understanding what type of tenant profile you want. So for me, I want the family. I know the specific type of family that I want. 2 kids, like I said, the dog and the cat. The parents are between 35, 40. The kids are 5 to 10. So I'm kind of buying in those areas near schools, near amenities, near grocery stores, near parks. So very strategic in where we're buying to attract the exact type of tenant we want.
So you get that specific?
Very specific, yeah.
You get that, and then how do you vet? Like, so what do you're putting ads out? How does it work?
Yeah, so we vet through the specific marketing in the way we market to attract the type of tenant we want. But after that, it goes to the normal credit check, income check, make sure they actually work where they say they're working. And we have the property managers do all of that and vet all of that for us.
You're a great guy. How do you differentiate between what comes along with great guys, the sentimentality part of it and the business part of it? Are you very strict on keeping it numbers, business, and then are you friends with these client tenants, or do you kind of separate yourself?
So I separate myself as much as I can. I let the property managers kind of run the business in the background, but I am fairly lenient. If something happens in the tenant's life, they have a problem with financials and they can't pay this month, we're fairly lenient with stuff like that.
There's no eviction notice that goes up the next day?
No, not really. We're very lenient with stuff like that to a certain point, of course. Business is business. But then numbers-wise, again, I'm not looking for this big grand slam deal. I'm just looking for the easy stuff, consistent, and just stuff like that.
And you mentioned property managers. So are all your properties managed by somebody else?
The majority of them are. The only ones that I manage personally are my oldest ones, and only because they're down the street from where I live. So I might as well do them.
Okay.
But everything else is completely hands-off and managed by property managers.
And so, it's not 100% passive, because when I was in that game, I've sold off everything and more in the land development space, again, because of my profile and what I want. But when I was in the game and have property managers, somebody else looking out for it, you still have to manage the property managers.
Yes.
You may not be managing your tenants, your clients, but you do have to manage the property managers. Are they hard to find? What are we typically paying a property manager? How does that work?
Yeah, so a typical property manager, you're paying between 5% on a very good deal. If you have a lot of properties with one, they'll give you 5% of the rent. Up to 8% is common.
8% of the monthly rent?
Of the monthly rent, yes.
Of the monthly rent. Yeah. Okay, so if it's, you could be paying anywhere from, in your properties, what is it roughly, from anywhere from $100
exactly.
to...
About $90, $100 on the typical single families we have.
Okay. And so we're going to go through a specific case study after the break, but generally speaking, Matt, what do you look for in terms of an annualized ROI? Let's say it was just a turnkey type property. You didn't have to do any work to it.
Yeah.
When we look at the appreciation, somebody paying down mortgage, some cash flow, against what you've put in, what do you kind of look at as an annualized return on your investment?
So kind of the minimum we'll go for is 15%, which is very low for real estate. But again, I'm more so interested in quality. So if it's a good quality property in a good area, it's going to have a good tenant, 15% is okay with me, but we're getting much more, usually between 20, 25, maybe even up to 30%, depending on the deal.
But you're happy if it's a great vehicle, to be able to invest in, you're happy with 15% if
Yeah.
you've got a great quality. Yeah, I mean that's great. And what are you looking? Do you do this with all your own money? Do you do this with partners? How do you do that?
Yeah, so at this point, it's all with partners. So I'm using all the partners' monies, and they're also qualifying for the mortgages for me. That's kind of how I built my business so far in attracting JV. So it's really great this way that we get to scale much quicker than if we're only using our money. But that comes with time and building your business and building a brand. That'll come.
And so if Rav wants to partner with Matt, I'm the money guy, you're the working guy. We're kind of typically splitting the profits 50-50.
Exactly.
And then what kind of exit strategy do we have? Is it putting a 1 year, 5 year? It varies. How does it work?
Yeah.
So Rav's a partner. He's invested $100,000 with Matt. How do I exit that deal?
Yeah, so it's typically a 5-year minimum is what we want to hold it for. That's just in case there's market fluctuations, changes in the real estate cycle. 5 years is a really good benchmark to aim for, but we might hold it for 6 years, 7 years, depending on the market and what's going on at that time. Or we might sell sooner. We might sell in year 3 if we see the market kind of changing.
That's a discussion that you and I will have.
Yeah.
Okay, and I'm sure that discussion involves maybe we refinance and pay you out. Maybe we sell. Maybe title transfers over to you and I get out. So there's just
Exactly.
different things we can do. But there is a contract that says this is what it's going to look like for 5 years, and then we can revisit this.
Yeah, exactly.
Okay, well listen, thank you so much for being on the show. We'll take a quick break and then we'll look at some numbers. I'm talking to Matt, savvy real estate investor. We're learning how to make money in single family properties. Don't go anywhere. Everyday Investor continues in a moment.
Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Clover Properties Rent to Own. Invest with a purpose. Sam McDaddy Real Estate, full service brokerage for all your buying, selling, and investing needs.
Hey, it's Rob. Welcome back. We're learning how to make money investing in single family rentals. My friend Matt is on the show. Matt, again, thanks for being here.
Thanks.
I love having smart guys on the show, but also understand what they want out of this game of real estate investing, because it's so vast, right? People just think, you just buy a property, rent it out, and hope for the best.
Yeah.
But, that's what this show is for. We can invest in student rentals, single families, duplexes, land development, private lending. There's so much. You've decided to make most of your portfolio single family rentals.
Yeah.
So let's look at a real live case study. Where was this property? This is a more recent property that you just put together?
Yes, this is a recent property and the type of properties that we can find almost every day of the week in the local area of where I'm investing.
Okay, and where's that? Where are you investing?
It's about an hour outside of the GTA.
An hour outside of the GTA. Of course, it's not south, otherwise you'd be on a boat.
Yeah.
East, west, north, where are you?
West.
And why did you choose to invest an hour west of the GTA?
So it is my local area, which is not something I promote that you should invest in your local area. However, it happens to be a great quality place to invest. There's great job growth, great population growth. People want to live there, lots of things to do. It attracts the family that we're looking for.
And that's a great point you made, because a lot of people want to invest where they live.
Yeah.
Right? And it's great to be able to do that, but more importantly, I know you teach, the numbers have to make sense.
Exactly.
Right? You said you want anywhere from 15 to 30%
Yeah.
annualized returns. You're not going to get that in some areas, and so that's why you've chosen to do that there.
Exactly.
Okay, great. So we purchased a property. What kind of property was that at?
So it's most likely a semi-detached property. That's what we're buying the most.
Semi-detached.
Yeah.
Okay, so an hour west. I'm not buying that for $100,000. What am I buying it for?
$340,000.
$340,000 is the purchase price on that, and is that kind of roughly your niche? What you're comfortable? Anywhere $300,000-$400,000?
Yeah. So our exact model is between 340, 370. So 340 would probably need more work. 370 is a little more turnkey.
Dude, I love you. Like, you're that specific.
Very specific. Yeah.
That's amazing. Okay, so $340,000. So as an investor, your down payment, are we roughly putting in the 20%? Is
Yeah,
that
20% down. So 68,000 in this case.
68,000, and then you've got some closing costs. What's that?
1,700.
1,700. Now, was this a property where you kind of a turnkey, or did you put a little lipstick, or did you do more than lipstick on it? What did you do here?
So this one we're renovating completely. So we're going to budget about $30,000 for renovation. That includes floors, paint, trim, kitchens, bathrooms. We like to do it all so that we
Wait a
attract.
minute. You must be really good. Did you just say we're renovating completely and we spent $30,000?
Yeah, the home's only about 1,000 square feet typically, but we do have a team that we give work to all the time, almost the whole year blocked out, so that we are getting better prices on labor. But that is one good strategy to use if you want to become a savvy real estate investor.
I mean, you know that's the hardest part, right?
Yes.
Finding the great trades. You feel like you've nailed that down, because that's the hardest part in the rental business.
Yeah.
Unless you're picking up a hammer and nail yourself.
Exactly.
Do you do a little bit or no?
I used to do it all, but I don't do it anymore. It's all hired out.
And Rachel's not doing it for you.
No.
Okay, so you outsource that. So you said $30,000.
Yeah.
Okay, so you have $68,000 down payment, $1,700 closing costs, $30,000. So that's almost $100,000. What's that number?
Yeah, about 100.
$100,000. Okay, so tell me how we're making money on this now.
So we're going to hold it for approximately 5 years. We're going to let the tenants pay down the mortgage consistently, high quality. We'll just let the market be the market. We'll let appreciation do its thing. And then we'll sell in 5 years, cash out, and split profits 50-50 with partners.
So it goes up naturally. We forced it to go up because we did some renos, there's some cash flow, and they're paying down your rent. For you, out of those four ways, what's the most important?
For me, it is the tenant quality. So the mortgage pay down is the most important. That's what I look for. Will this mortgage be always paid every month without me having to chase tenants? That's what I look for first.
I like your style.
And that dictates good area.
Okay, so Matt, we're in this property for about $100,000. And so what are the ways that we're making money? Obviously, it's cash flow, debt reduction. Go through these numbers for me. Yeah.
So on this specific deal, the cash flow is about $1,800 a year. So
$1,800 a year. So it's about, it's $150 a month.
Yeah, and that's the average what we're doing.
Okay.
Yeah.
Great. And then?
We got the mortgage pay down to $5,500 per year.
$5,500 per year. So $450 a month is getting paid down on the principal.
Exactly.
Obviously, there's some that go to interest, and especially when you start, the majority, but you're getting $5,500 coming back to you.
Exactly.
Principal recapture, if you will. Okay, and then it naturally goes up in value.
Yeah.
So what kind of, you seem like a conservative guy, what percent did you use to go up?
So we use 3.5%, which is very conservative. Very likely in my area, we're up to 5-6%. Obviously in the past recent years, it's been much more than that. But historically, my area is about 5%. But I want to be conservative and bet for 3.5.
I love that. So 3.5, and that 3.5 isn't on the $340,000 purchase. It's on the new value.
Exactly.
Because you put some. Okay. So what does that spit out?
About $15,000 per year.
$15,000, and then you force the appreciation up. How much would that be?
About $10,000 on average for a typical single family.
About $10,000. Okay. So if I add up the cash flow, the mortgage pay down, the natural appreciation, and then the appreciation that you forced because of your renos, that gives me what if I total that?
$32,300.
$32,300. We're going to divide that by the $100,000 that you're in for, and so that's obviously about a 32% return on investment. Obviously, we're not going to always have that 10,000 because you just renovate once, but it's already 20-25% if we take that away year after year.
Yeah.
And that's exactly what you said.
Yeah.
You want to enjoy anywhere from 15 to 30%.
Exactly. Very passively is the key.
Very passively, right? You're just managing your property managers. And then so at some point, do you refinance and do this again?
Yeah, so we can definitely refinance probably in year 5. If my partner and I want to continue our partnership and keep going, we can definitely refinance, pay them out when we can, and keep going from there. Or resell it, it's open.
So in your case, the return is actually infinite.
Yes.
Because you're using a money partner to do this. And so talk a little bit about how you structure that. The best way to do it is to make sure it's a win-win on both sides, right? And so you've been doing this long enough, but do we have, so Rav wants to do this. The cash invested was $100,000. So I'm going to give Matt $100,000. And is this just cash? Obviously, it can come personal, it can come from incorporation.
Yeah.
But are you using RSP money from Rav, or is it mostly cash money?
At this point, it's mostly cash money from all my partners. We could use RSPs. We can definitely get into that.
A little more complicated, a little more paperwork.
But I also need my partners to get the mortgage in their name. That's kind of how we partnership with me. So if they can't really use their RSPs because it's their own money.
Got it.
Yeah.
Okay, so I'm going to get it in my name.
Yeah.
And then how does Matt protect himself in this situation? Because obviously there's going to be money partners. Not obviously if you know what you're doing,
Yeah.
you're starting with family and friends. Because if you no, but that's very important. A lot of people want to partner, but they don't feel like they can go to family and friends. I always say, if you can't go to family and friends, the whole point of this is to help people.
Exactly.
Right? To help people have time to enjoy.
Yeah.
And so if you can't go there, then maybe we shouldn't be in this game.
Exactly.
But eventually we run out of family and friends. And so there's people that just come to you and say, hey, Matt, I've heard about what you're doing. We know you're competent. I feel like I can trust you. Yeah. How does Matt protect himself if I'm the one on title?
Yeah, so we have a joint venture agreement that we sign off title. So
Off-title.
we can register on title if we want. However, my partnerships are all built on trust. Really want to have a good friendship with my partners. So it's just there kind of in the background, but it is a legal document that is signed.
And is there, so do we bring this to a lawyer? And if we do, you have your own lawyer, I have mine, we share, how does that work?
Yeah, you can bring your own lawyer for sure. Again, it's mostly based on trust, but I have a lawyer who made this document up, and my partners are 100% able to bring that to their lawyers, and we can do it that way.
You know, back in my real estate days, you know, I used to own a brokerage. I was helping people to buy, sell, but also invest. And people were just so afraid, right? So I would make them a deal that you be the money, I'll do the work, we'll split it 50-50.
Yeah.
But I put in there, after 1 year, you could rip up the contract and it's yours. Because I did the same thing, it was in their name.
Yeah.
I made the money on the purchase as a real estate agent, so it didn't really matter to me. Every single person ripped it up because they just, once they realized, this is easy.
Yeah.
This is boring. Yeah. This is simple. Especially if we do it the way Matt does and very conservative. You know, it doesn't have to be, you know, sexy, if you will.
Exactly.
The best money is made just slow and steady. Matt, listen, it's great having you on the show. I love your opinions. I love your mindset. I think lots of people can learn from somebody like you. Please come again, you know, on the show. But it's been wonderful. Thank you so much.
Thanks for having me.
Yes. And thank you for tuning in. Without you, we wouldn't have a show. For more information on this show or any others, or to become an Everyday Investor Insider, where you can get investment opportunities, tips, advice, go to everydayinvestor.com and sign up. Until next week, we'll see you same place, same time. Honey, I love you. I'll be home soon.